All right, welcome to another Futures Initiative trading recap. I have with us Dubster and a special guest, Lucas, who is going to be following on, and we hope to hear from him later on in the trading recaps with his trades, his strategy, his setups, and his thoughts on where the market is going to run to and go from there. All right, Dubster, thank you again for joining. Let's start off with your trades for the day.
Oh yeah, thank you for having me today. All right, so this is what I have for the day. I went ahead and I traded out QQQ, and I saw that on the 1 hour frequency, there really wasn't anything that I liked based on the strategy that I used with the healthy order block. Um, I only saw that there was a wick on top. So what I went ahead and did, and I dropped down to the 15-minute, and I wanted to see exactly if there was a healthy order block, which in this case, if we look at this specific section here, we have healthy order block due to this fair value gap. I went ahead, dragged it out, and I did my entry point, same as always, the GAN box, 0.5 off the GAN box, and my stop loss is always going to be a couple ticks above the top healthy order block. In this case, on today's trades, I think the entry point was solid. My only problem and my issue with this was the fact that I got wiped out of this trade for options. When I got wiped out of this trade, it went up and then it came down. It did hit my target profits. The problem here was that I got wiped out. So one thing I did notice after I did this, after the trade and I got out of the trade, I started figuring out where exactly I wanted to go. One thing that I did miss was this specific buy side liquidity up here. I should have played around this specific area. I saw this gap right here. I ignored it. I didn't think it was going to go up. But what I should have done, I should have paid more attention to this section up here and respected it a bit more. Since it was off the 15-minute, I should have this specific section due to this gap that I'm seeing, this liquidity void, and then plays based on it. If I would have done at that point, I should have entered on a GAN box entry, included this specific gap into my healthy order block, and I should have entered all the way up here, moved my stop loss in this section, a couple ticks above always, and played off of here. Entry for me, but honestly, I missed the liquidity void. I didn't see it. I didn't even pay attention to it, and I got so distracted that I played based off this healthy order block here, and it took me out. Profit did go the way we wanted to, the direction we wanted to. Unfortunately, I lost this trade and I took a 9% hit here. We're gonna go back to NQ, and there is the same setup I took, exactly the same one because that was QQQ. We're gonna go ahead, drop down to the 1 hour so I can show you guys how it looks. I did not even bother looking into this one. Why? Because I really want this healthy order block to be played. That's the strategy that I use. So I did not pay attention to this section. I ignored it. That was probably the issue that I had today. We went ahead and I played based on that healthy order block off the 15 minutes. We know that we're seeing it here on the 1 hour. And on the 1 hour, the fact that this fair value gap was so large, I ignored it off the 1 hour and I dropped down to the 15-minute. I went ahead and scouted off the healthy order block. But one thing that I did notice, which I did have drawn out as well, I did see a healthy order block off of this specific section here. This is a fair value gap. That's a healthy order block. But I didn't expect for price action to drop off of this specific section here. The reason why I didn't expect it was I was bear for the day. That was my daily bias. So I expected a rejection off the first healthy order block rather than the second one. If I would have taken the second one, I would have exactly hold my stop loss above it. The only problem with today's issue was that I was playing off of a funded account and I only had a $500 stop loss. So when I entered here, I went in with a mini and a half. And by the time I reached up here, that $500 contract, I didn't even make it to this specific section. I did have my stop loss here, but by the time I made it to here, I got wiped out. And unfortunately, I didn't catch this trade here. Setups I had to, and I lost. I took a hit today, but on these two specific trades, I thought setups were really fabulous. They're really nice, but I did learn something good. Um, don't ignore these liquidity voids. I have been playing off of this liquidity voids these past days, and the one day that I ignore it is the one day I take a hit for ignoring it. So it's just good experience for today. So I think the setups were good. It's just the fact that either I was off because it was news day or I was just off before ignoring the liquidity void. What do you think, Juan?
You bring a lot of interesting points. First off, it's awesome that you're trusting your strategy and following through with it. Win or lose, you are taking the trade. That is an incredible skill that many do not possess and may never possess, because in this profession we are expected to lose, but we manage our losses like you did. You said you got whipped out, you got stopped out, fine. You then went back to analyze, okay, what happened, and that is when you stumbled upon the liquidity void.
Yep.
So it's that willingness to go back, accept that, you know what, I was wrong. It's not the market. It was my strategy. You know what? Fine. Go back, refine it, work on it, and now you know exactly what to look for,
Yep.
because that in the end is what is going to make you even more profitable, because now you're going to be more aware of that. But I think your trades were on point. It was just the entrance and the entry of your trades that were slightly off. But being that it is futures, you do not have the luxury of being slightly off, especially trading it one mini contract. One mini
Yep.
contract can run against you rather quickly, as you saw.
Yep. Yeah, and that was a
But
mini and a half.
exactly. So $7.50 each tick is, so even more so, you have even less room to play with.
Yep.
But again, every day and every week that we walk through these trading recaps, it is incredible to see you refining your strategy, to see you continuously improve. And your entries are going to improve as we continue in our journey to becoming funded traders and to become more profitable traders. So this is just one of the first steps, is taking that loss, understanding it, and walking away saying, you know what? It happens. Tomorrow's a
Yep.
new day. We took a hit, but we now know here is something else to keep in mind.
Exactly.
So I believe we actually took trades at the same time, except for my options play, which I I can I can go ahead and pull up.
Yep.
So here I too initially was bearish, because of we had CPI and inflation, and then we had unemployment and jobless claims and PPI. So with that being said, I had this liquidity void mapped out, but above it, I was expecting price to retrace into this order block, which it did. It filled this fair value gap on the 1 hour. But looking at the 1 hour for today, I initially wanted this to drop straight through and continue to take out liquidity. But what it presented instead was rather much more valuable. We filled the volume imbalance from pre-market, took out liquidity, came to consequent encroachment, and went and it left. So seeing that we're on a 1 hour time frame, let's break that down to like a 5 minute. Initially, I was bearish, and after the swing high in the morning, I took puts.
Mm-hmm.
Actually, at 9:40 to be exact. Took puts, grabbed profit, kept it, said, okay, next. Then we saw this immediate rebalance. That got me thinking, okay, where is liquidity running to? And I thought, wait, this looks way too clean. Why does it look too clean? So we took the GAN box. Let's take the 50% of this wick. Make sure I'm lining this up exactly as it should. Right to the 50%. Oh, let me drag it down. It really doesn't get much more perfect. It reached for the liquidity to the downside, grabbed all the liquidity here, took out the remaining liquidity, but did not fill the fair value gap. Why
Yep.
it is that important? Because it shows a willingness to go higher and a lack of interest for printing price lower. And it was at this time, it was actually at 10:15. If you were to look at the alerts where I did alert calls, where was my expectation? Initially, it was the buy side liquidity, which was sitting right above here. So all this buy side liquidity, I wanted it to take out, but we also went in with two contracts. Seeing as though we were in with only two contracts, we trimmed one at 10% to give ourselves a buffer. So we had one left. As you can see, we didn't exactly get time to average down. So it ran fairly quick. And so playing with one contract, it is better to take profit at 50% and then understanding that the expectation is there, watching price sitting on the sideline and paper trading our way there, which is totally fine. And that gave us a 50% play on the QQQ calls, but those ended up running 110%.
Yeah, that was a good
So
catch.
so those, you know, could I have held on longer? Absolutely. But I'm glad that it went and took out this fair value gap up here or came close to it. Glad that it ran through the 4-hour fair value gap here. Now let's go to NQ and see what we're dealing with there. Right. So this was an older 15-minute fair value gap in red here, but we can see how price is still respecting that previous fair value gap. It is respecting it, and it is what was resistance is now acting as support for pricing. We're seeing that here. So we see the buy side liquidity got taken. But we know that when buy side liquidity is taken, it's not enough for it to just wick above it. It needs to run through it. So when we wicked above it, I took shorts all the way down, got a nice 30 bar play, and that was good enough for me. Pre-market, I did play PPI and jobless claims. When that news came out, was that the smartest idea? No. Would I recommend people trading futures to play those? No. I'm starting to recognize a pattern for when these things in news comes out, and I'll be looking to play those in the future because it is a very nice way to start and end the day before market opens. There's no need to play with the intraday nonsense. You can start and end your trading day in about 2 minutes. I mean, truthfully, if we look at the 1 minute chart, we go back to pre-market. Look at this. Look at this mess. became the consequent encroachment of a 4-hour fair value gap right smack dab in the halfway point. I mean, good night. Look, it does not get more perfect. And it just wicks right up. I mean, we're talking, look, you catch it up here, you go for a nice 40 bar ride, start and stop to your entire day. What a beautiful trade to take and to be done with your entire day in one fell swoop. But since I did not catch the entire way, and like we've discussed, still working on holding the contracts longer. That's something I did not do well today with futures. I did not hold them as long as I wanted to, but it it definitely helps to understand where price is moving to, where your target is, and then siphoning off profit as you get there. So for tomorrow, I am going to look for a slight retracement up. I believe we will take out this fair value gap to the upside and then come crashing down. At a bare minimum, I firmly believe this is going to come down to 15,590 at a bare minimum. But why that range specifically? So if we look at this range overall, we take our Fibonacci and we overlay it. Please pardon the mess and the lines. We see the buy side liquidity sits right at the optimal entry. You're going all the way up to the 0.79 or 0.75 would complete the golden pocket and a great Fibonacci retracement. Now, why do I pick that area specifically? The 15,590. Go ahead and reverse this. Put it down here. For a smaller retracement, actually, we would want up here. Let's get the immediate retracement because we've seen this pattern one too many times, right? We see that it comes up, it comes close the first time, it comes down, takes out liquidity, comes up, short-term high, comes down, does not create a higher low. Then we come up again, creating another higher low, and then we break through the top. But once we do, we come down to equilibrium, come back. But if this wants to complete the Fibonacci retracement, golden pocket, optimal trade entry sits right at 15,590. That is why I expect price to return to that level.
Makes sense.
That'll be my game plan for tomorrow to see what happens. I see that on the 15-minute, we do have a very large fair value gap, but I think it'd be worth looking at the 4-hour. Have we created any new fair value gaps? We haven't. We've taken out the liquidity. We've come to take out the buy side threshold. We're at consequent encroachment of this candle, of this candle's wick. Now, if we reject off the bottom of the fair value gap on this 1 hour, that'll be mean threshold of the order block. Which we're what, 18 bars from? Then it's downside time because look at all this liquidity we have left. Look at all this liquidity to the downside. If we take it down to the 1 hour, oh yeah. Oh, this looks too perfect. Oh, wow. That looks like institutional order flow. Look how perfect these are aligned, leaving almost no fair value gaps except for one down here to break down to 15694. But then we're left with an old fair value gap here on the 1 hour, old fair value gap on the 4 hour. I
Mm,
bet when we go down to the 15 minute, here we go. This large fair value gap on the 15 minute where we were inefficient in selling.
I see. I would like to ask you something.
Absolutely.
So based on what you just described on what you would like to see, if you go
Sure.
into the 1 hour,
Mm-hmm.
you've seen my strategy, you'll see that where you have that 1 hour fair value gap,
Yep.
that's exactly where my healthy order block is set up, right? So if I
Right.
were to play that entry, I would grab the GAN box from the top part of the green candle all the way to the bottom of that fair value gap. So I would like for an optimal entry off that 0.5 off the GAN box.
Okay.
That's the entry that, based on the strategy that I play, I would like to see. Now, obviously, that's the zone that we want to enter. We want that fair value gap zone to enter. So as it enters that off the 1 hour, I would go ahead and drop off to the 15 minute and see exactly how it's playing off. Obviously,
Okay.
once we see that it starts playing off on the 15 minute, then I'll go ahead and drop down to the 5 minute. And I see that if it doesn't reach my 0.5 off the GAN box, but off the 5 minute, if it went up to that 1 hour fair value gap, I see off the 5 minute side momentum, then it's gonna leave a fair value gap behind, right? Which in this case, off the 5 minute, I will draw that fair value gap, and on the reversal, when it comes back up, balances off that fair value gap, I would like to continue on the downside. That would be the only way for me to enter to the downside against my position for my strategy. But other than that, if it doesn't show that, I would not enter the trade if it doesn't touch that 0.5 entry point.
Okay. So what you're saying is it must touch that 0.5 entry point for you to even consider the trade.
Yeah, for me to enter based on that strategy, yes, that's how it.
Okay.
hmm
So
But
go ahead.
that's why I'm saying that if it doesn't enter my 0.5, then I
Mm-hmm.
eliminate that strategy, but then I would swap my strategy to a market structure shift. And that's why I would drop as soon as it enters that, let's say it does want to reject from the 1 hour, then I would swap the strategy to a market structure shift. I'm in it, and I'll see that fair value gap that it'll leave behind off the 5 minute. You get what I mean?
Right.
Because if it does drop to the downside, it's going to come down with so much momentum. It's going to leave that 5 minute for value gap. It's going to come back up, balance it out, and then keep continue for the downside. So in that case, that's the way I will swap into a strategy. Like if one strategy doesn't work, but is showing potential of a rejection off the 1 hour for value gap, then that's when we're, as a trader, as the strategies that I play based, is when I adapt into one setup for into another right off the bat because I expect a rejection off the 1 hour for value gap, but there's no way I'm gonna enter off the 1 hour if I already have one specific setup. And the only way for me to change my mind is on the market structure shift.
Absolutely. And that's fantastic regardless, you're sticking to your strategy, you have a backup just in case.
Yes.
That's perfect. Because on the 1 hour, why am I targeting this area specifically? And even though, so this, there we go, it should be drawn more like this. Yes. But why this area specifically? This right here,
Mm.
this candle. This is what I want to be taken. And going just past that gives perfect recognition for the downside because that would have taken out quite a bit of buy side liquidity.
Yes.
Now, here comes the catch.
And we also can't ignore that that gap.
No, we can't. We can't. We
Uh,
would be irresponsible to. But if you also look, that 0.79 where you wanted to enter, let me go ahead and zoom out a little bit. The top to bottom of the fair value gap. We're just at the point two, just above 0.25,
yeah.
which is perfectly fine because that gives it time to wick past and come straight down.
And remember, 1 hour is a big range. I don't necessarily jump in exactly at the 0.5 based on the 1 hour,
Right,
but wanted to enter that area. Then you
right.
drop down to the 15-minute and consider exactly what's going on.
See, and that is where that 0.79 is just above the fair value gap,
Yes.
just above.
And that's a healthy order block for me right there off the 15-minute.
Exactly.
You get what I mean?
So, yeah.
Yeah.
And so we still have a few liquidity voids to go and fill up. We do. So I'm expecting those to fill overnight. If this buy side up here, but I expect that to be taken because then we're not too far from the highs.
Yep.
But I do not expect this to be taken at all. I do not expect the all-time highs to be taken in any respect. Let's go ahead and jump down to a 4 hour. I mean, look at this price action. Oh my lord. A nice reversal. But now we're coming to what's called a max pain. To the third wave. This right here. That could be our last stand. This liquidity void.
Yes, that was very important.
On the 4 hour. I would say that would potentially come on a news day.
Hmm.
If we're still within this range. That's a large jump. That's a 200 bar jump, 300 bar jump. But I know this is going to be taken 100%. So when we start looking at like the much higher time frames, so we move the lows down here, our highs all the way up here. It's perfectly logical for this to run past. Would not be unheard of if this liquidity void just happened to get snapped through and come right back.
Hmm.
But those are my expectations, and that is essentially the reason why I took said trades today, where I'm looking for price to head to tomorrow and in the near future. But are there any questions you may have?
Nope. I am good.
No, sir, I'm good.
Perfect. Perfect. Well, Lucas, thank you for joining us tonight. It has been a pleasure. Thank you, Dubs. It is always a pleasure to have you and have your knowledge shared. I know we're gonna kill it, and we're getting better every single day.
Yes, we are.
Absolutely. Well, for anyone watching, if you have any questions or comments, please let us know. But until next time, thank you.